Hello and welcome to another Apex Signals strategy video. In this one, we're going to talk about the trendline break strategy. This is a reversal strategy, and there are a couple things that are needed. Number one, you need a really obvious trend line, one that everybody in the market's aware of, because part of this comes into the psychology of a trend line break. If everybody is following the same trend line, and it suddenly fails, then of course the market is going to get very skittish. So here on the Disney daily time frame, on the chart here, you can see that there was clearly an uptrending trend line that had hold the market above and showed support for basically 3 months. So eventually we ended up breaking below the trend line, and that obviously is a serious signal. That's something that catches a lot of attention. Now, you have the criteria for something that matters as far as the trend line is concerned. After all, we'd been following it for several months, and it's obvious. So that's what you want to see. You want to see something that's really obvious, something that's very contained, something that's very reliable suddenly fail. So now that that happens, how do you take advantage of this sudden reversal? Well, there's a couple different ways you can do it, but the most common way is to simply measure out where the quote-unquote obvious trend line starts and expect to retrace to that. And this works in both up and down trend lines, but certainly in this scenario, you have a perfect trend line that's just begging to be broken, and once it is, you can see that the sellers took hold. So you go down to the bottom of the obvious part of the trend line, and you aim for there. The breakdown below that trend line sends the market down to that area, and you did get down there. The stop loss really comes down to your personal preference, but at least a candle, if not two above, give it a little bit of room to move. Now, in this particular chart, I'm going to go ahead and switch the auto scroll off so that I can go back. And you can see that there is another obvious, in this case, downtrend line. Now, we have broken above it, and we even pulled back a little bit. Now, in this particular case, you may have ran into a bit of trouble, but you can see that this was the beginning of the return. So while it is a noisy strategy, it does produce some nice moves when they happen. You can see here, obvious downtrend line. We gapped above it, which the gap in and of itself is a bullish sign. You put your stop loss below the lows here, and you cleanly took out that trend line, the top of that trend line, almost immediately. Very similar thing could have been called here. Where you gapped above here and you had a pretty quick run. And again, there was a trend line that we started the video out with, and there are several examples of this as you go along, and this does tend to work really well with stock CFDs because stock traders tend to be a little bit more herd mentality than Forex traders. You know, Disney is working on Wall Street. Wall Street analysts all recommend it. So everybody jumps in at the same time. So again, to recap, the trend line needs to be obvious. And then when you finally do break down below the trend line, give yourself a candle or two. It really comes down to your risk appetite for a stop loss. And then you aim for the beginning of that trend line. And most of the examples that I've shown you on the chart did work. And in fact, this one would have worked out if your stop loss was deep enough. I would suspect, though, that most people, once we broke down below this candle, would be a bit skittish. But ultimately, it did work out. And in fact, it did go up to this area here. So although that might have been a little bit of a loss, you can see it did foretell what was going to happen. So very interesting trend line break strategy is one that a lot of traders out there use.